15 June, Thursday, weekly expiry, FNO, Nifty and Bank Nifty, beer channel day. Okay, so let's go for weekly, daily chart analysis. Okay, okay. So today, uh, price given breakout, but immediately uh, uh, brought down and closed at the midpoint of the week. So Monday, doji candle in daily candle, bull bar. Tuesday, Wednesday, a reversal bull bar, and Thursday, bear bar. Now, today price tried to broke above last week's high, but faded by sellers. So weekly, uh, tomorrow is last day. So also approach for uh, same happened last week also, that Thursday is this move is of Thursday. The next day is Friday, where same resumption is shown here in yes Thursday's move. So chances of that uh, also be possible. Moving average is uh, act as a support for Nifty. So it's still much distance to cover. Okay, let's go for hourly chart. So last 2 days, Monday and Wednesday, price stays in bull channel. So today, uh, what happened is this channel is breakdown. So probably it is considered as a today's high considered as a first leg of buyers. Now we can consider as a this beer bars considered as a pullback. Okay, now let's go for overall view. So we can in this day on this day we can trade for swing trade. There are uh, very good swings are available. First half of the day is faded by both buyers and sellers, so buying swing trade also good trade, and sellers have also good position, and sellers after faded here by sellers, uh, all day always in position and all day is bear channel. So that's why name uh, indicates bear channel day. We put bear channel day. So this move is uh, easy to predictable. How we will see that? So in general, we look for, let's say, this is the good bear bar. So selling below it also good approach. But after this green bar, so this is considered as a opening reversal bar. So most of sellers are exited here, and this is the high on close. So buying here is uh, have more chances because opening reversal more. So probably this is the first leg, this is the second leg. Again bull bar, stop loss below it, and buyers have traded it. This is the breakout candle. So here is the good buying signal for swing trade. It kept to this level, then faded by sellers. Here, uh, this sellers move faded by buyers. Okay, now here again, after breaking this breakout candle, so sellers have traded for midpoint and days low. So this is the also good opportunity. This portion is sidebars. Here good also selling position can be created. H2, high 2, this is high 1, high 2, EMA gap. Look at this. Midday breakout fail. It tried to break out, but it pulled back. So also selling approach in second half. So one bull signal is here for swing trade. There are two signals where majorly swings. So one sell is here, one sell is here. Okay. Now let's go for candlestick analysis, all candlesticks, and then we'll go for one way of trade, all day structure. Okay. So yesterday we seen that uh, price staying in bull channel. So buyers have large portion and all the swings, major swings are in buy side. This is the EMA breakout. Price stayed above moving average. Now what happened is here today. This is the trend line of uh, lower channel. So here tested one time. Uh, Today first candle is bear bar. It tested low of the channel. Now very next bar 2 is doji candle, which is not good follow through. Who have sold here at first candle, they are disappointed, and if the price is traded above this second candle's high, so there are chances that this move is faded or reversal may happen. Okay, so third candle is pull bar closing on its high, so it is considered as a reversal bar, opening reversal bar. So yesterday same happened. This is the reversal bar, uh, but price moved below it, so exiting below it and then again taking position at sixth candle. This is the opening reversal move. Same happen here, sixth candle, which is the great bull bar and opening reversal trade, because if entered here, so this is the stop loss and again we can scale in and take trade for swing trade of bull side. Okay, so sixth candle is closing on high, bull candle, buy on close. Seventh candle, which is the breakout of EMA. So this two candle setup shows that this seller's move is faded. Lower channel low is tested, and now buyers have space. Buyers will trade for two legs. So buying on seventh close candle is also have high probability. Now let's consider uh, seventh candle as a 50-50 chances that it will go up and go down. Stop loss for entry, buy on close at seventh candle, stop loss to be here below sixth candle or below third candle. Now here buyers will trade for measured move. Okay, so below sixth candle, let's say this is the measured move approach. Okay, now buyers have a high probability, more than 50%. How? So it tested low of the channel, opening reversal trade. This is the breakout good looking looking bull bar. So it creates more than 50% probability of going upside. So taking trade on 7th close, it's good approach. 8 candle is bull bar. So now 8, 9 and 10, these are consecutive bull bar which taken price to uh, break high above the today's high, broke high today's. Now 12th candle is bear bar and again faded by in 13th bull bar and 14th bull bar. Okay. Now after seeing 15th candle, just move your SL to here and exiting on 16th candle is good approach. Okay, let's see why. Here observation is that sellers are totally faded. So who sold on first candle, second candle, fourth candle and fifth candle, they are at break even point. Who trade bulls have more space. In this bull move, faded move, sellers even not triggered entry. So there are only buyers here. Now if fading happen here, so chances are very high that in this move, if sellers have no space, then this buyers move is also faded by sellers. Okay, yesterday same happened. This bears move is faded by buyers, but now they giving chances to bears and equal participate in this channel. This is the bull channel yesterday. Here it created micro channel. So now what happened is that 16th bear bar, who sold near 16th bear bar in 17, 18 and 19 candle, they are in still have favor to hold the position. And just move your SL to here. Now 19th candle, which is the bear bar closing on its low. So it is the breakout bar. We consider it as a breakout bar. Now in this move up to 22 bars, sellers not getting followed through, good follow through. Okay. And buyers tried to go up, but they are not taking prices too high. Let's consider if anybody bought above 14th high after looking at 16th candle and 18th candle, 17, 18th candle, the best option is to exit on buy order. Okay. Now in this move is faded by sellers. So what happened is that this two candle considered as a exhausted move after this bear bar, small bear bar. Now in this I have seen that in faded move structures, price not forming first low or to second low or first high or second high. Price go above the breakout point above the day's high and just they are feeding it. Look here, below low price go and these are faded here. So there are less chances of going for second leg. So second leg is somewhere around is completed here. Okay. Now 23rd candle is bear bar, which is the looking good. Sell on close. EMA breakout candle. Now chances high that they will. It is sure that this is faded by sellers. Midpoint price came. EMA broke down. So very next candle is buyers have traded for it and tried to push up, but they are failed. And very next candle followed through. 25th candle, which is closing on its low, which followed through also 26 bear bar. So if we look, So who's ever traded here, they are exited here. Prices go up. This is the micro channel. How can you participate it? Just buy market order around here, or just buy above the bull looking bar, good looking bar. Let's say uh, sixth bar is also good signal. Seventh is breakout bar. Eighth bar is very good signal for trading, for buying position. So somewhere enter here, and after looking that two consecutive selling bars, you exit here. Look, chances are very high that this move is faded. Okay, price this losing move structure, this breakout candle, even more than this candle is not traded here. Okay, so after 23rd candle, it is uh, very good looking bear bar, and always in approach is converted into selling position. So taking put side call, put is better option. Move your SL to here, and best approach is to sell here 23rd close, put your SL here. Okay, take in mind that scaling approach. Okay, we will see that if you traded here, so what is the idea for it, how it will do it. This is the faded move. Okay, this is the day structure. If prices go below that level, okay, we will set that. Okay, I will tell you. So this consecutive bear bars break low of 2 days. Okay, now after this 28th bear bar, it considered as a exhausted move. Why? Because if breakout is faded here, so also high chances that this breakdown also faded by buyers. This is the seller's exhausted candle, very long candle in this consecutive mode. 29th candle, which is bull bar, price traded above it, so higher chances that this is the faded move. Okay, now 31 candle, it, it below, after 31 candle, this trend line is broke. So first leg is we considered as a over. Okay, now 32 candle, 33 candle is good looking bar, buy on high, but we can't take as a good swing trade. We just trade it for scalping. Here also uh, we can't trade for swing trade. Okay, so this breakout confirms that okay, this move is faded by sellers. Now high chances that we test midpoint or low of the day. Okay, now here buyers have no consecutive candles, like 37th and 38th are two consecutive candles, which is also faded by sellers. So buyers first leg is completed here at 39th high. Okay, now look, uh, faded by here. So I have more than two examples that if price is first have faded by sellers, this is the faded by sellers, and price came to below low of the day, so that have high chances that further day will be close on low below these levels or low of the day. Okay, it increases probability furthermore if uh, uh, previous 2 days or previous day is good bull bar. Okay, so here this is the bull channel, we traded on high, we also broke here last week's high. So here all that structure fitted here, and buyers have space, but they are not gaining too much prices. So this faded move is not successfully considered. Sellers again took part, like 39th is faded by sellers. This is area is the sidebar area where good approach is to just stay calm. If you have bought 26 close, it is also good swing trade. Okay, 26 close selling. If you not exited here after looking 39th candle, you again add candle. You again scaling, so sell one more load. Put your SL here or below this breakout candle. After these, you can trail as well. If you see 3 consecutive bars, okay, this is the uh, extremely cautious part is that if, let's say, if 39 candle sellers traded here and if they are not taking profit here, so this is the faded move. If you move price to price, it's get option. And check for, one approach is to check for prices above EMA, how it reacted. Okay, so 46 good bear bar below EMA, so prices are uh, interested in stays below EMA. Okay, now this 51 bar, which is bull bar, closing on its high, it broke above EMA. It got followed through 52 candle, which is closed on its high, and again third consecutive bull bar, which is closed on its high. So now what we consider it as a, this is the first leg and this is the second leg. Okay, high 2. This is the best idea to approach it. After 53 candle, we are not sure that this is the ending of second leg, but 54th candle, which shows that H2 is triggered. Okay, now taking on sell, if you sold anywhere here, waited over up to this point and again sold here, just move SL2 here, it is the best way of trade in this day. Okay, how it increases probability here, that further will move to downside. Okay, so let's consider same scenario, that this is the faded move, price broke below low of the day, buyers have no consecutive more than 2 or third candle, this is the 3 candle consecutive bars and it is faded, so buyers have got exhausted, they will not look for buy, so it increases probability here. This is the H2 sell. If you not sold here, just wait. Okay, 55 candle, which is the doji candle where buyers tried to upside. Okay, 56, who bought 53rd candle, who they can again bought at 56 candle for scaling approach, that this is the going to be channel. Okay, and try to get prices midpoint. So who traded here after seeing this candle, they are all trapped or they exit at this candle. Okay, if you traded 56 candle for buying signal, so what your view for next two candle is to not broke below this. Okay, so this candle is bear bar, so it tried to go up but not able to, so you have to exit here or just put SL here and exit here. Okay, now in seller scenario, if you not entered at 54th close or 57th close, so what you can do is just put an SL order below this. Okay, 58th candle, which is the breakout candle of EMA and this price action, so it got followed through of 57th candle, H2 mid from pullback from midpoint of the day, EMA breakout. So it have more than 60%, 70% chance that further price will move down and price stay below EMA. 58th candle sell on close. 59 candle which is also for considered as a follow through, and 60th candle which broke all the laws of the day, which is the breakout candle. Now selling on close, it's a good approach. 61 candle retesting happening here. 62 candle retest, but not able to sustain above it, and again bear bar. Now 60. Now here one thing to observe is that 61 candle high is made here somewhere here. Now no prices is traded above it. Okay, so sellers are so confident that they they sell on every candle. Even they can trade it on 66 third candle, put limit order somewhere here, or just sell close of this. Yeah, put your SL here for scalping, put your swing SL here, and just scale in. Okay, if you sold here, just scale in here. 64th candle below bear bar, and 65 candle. Uh, so further move bear bar in this micro channel. So this is considered as a bear micro channel. 66 green bar. So here you can see that this is the both side move channel. So both buyers and sellers have same participant, but this is the more in downside favor. So sellers have more space. Okay, they are buyers have no reason to buy here. They are not gaining consecutive even 2 bars. Look at this. This is the first green, first green, first green. Okay, so good idea is to just sell on market order anywhere here and just put your SL appropriate. Even you see that candles high is not broken it anywhere here. Look at these high, these high, these high. Price even one tick above not traded here. Okay, so good idea is to sell here. 66 candle is bear candle. Now 63rd, which is the green bull bar, closing below 50% of the body. 66 candle is also green bar. So this is the indication that now this seller's move is somewhere ending, looks like ending, and buyers will try to get scalping. Okay, 66 candle bull bar, 67th candle bear bar. So 68th candle which is have not followed through, good follow through for 67 candle. So chances are that you put just SL somewhere here or here. Now 69th candle, which is the not interested by sellers, buyers tried to get in, so you have to exit here if you sold anywhere here. Okay, these three bulls bar in this small area, these micro channels are indication that buyers will enter here for scalping. No, there is no follow through sellers getting here. So below 69th candle, you sellers may exit here and buyers trade it for scalping. So 70 candle, which is the good bull bar. Okay, so some of the buyers have bought also here that this move will be also faded here, or we can just trade it for 2 legs really. Okay, this because this is the good looking bull bar. 71 candle which tried to broke down but not able to, and converted into bull bar. Now 72 candle is bear bar. Okay, so here one reason we can conclude that this is the first leg which is ending here, because this channel, micro channel, is taken out by this 70th candle. Okay, now this move is faded by 70th candle. Okay, so this is the first leg, 69th low, and 72 is just starting of the second leg, and it ends here. Okay, this is the last candle. Now let's consider uh, one more approach, just discussion. uh, Bears tried to match this trend bar. Okay, now good idea is to trade for it for a good swing, is that this is the good signal for swing trades. Here the breakout candle is good signal. Now what you can do, here you see that at starting of the day buyers price is kept above, so you observe that this is the micro channel. Okay, from here to here this is the micro channel. So what you can do is just participate it. How you trade this like of day, if you here confirm that by participating this micro channel, after exit below any bear bar. Okay, this is the bear bar, just put SL here and exit below it. So you can participate it in. If you look also that this is the selling leg, you just sold anywhere here and set in mind that you will exit after first green candle or bull candle. Okay, so in this move there is no single good looking bull bar. Okay, so this is the idea to trade here. You can also see here that this is the bull bar which is not body have more than 50%. If prices go above that, you can exit, you can take a reverse trade. But it is the main idea to trade micro channel. You just participate it. It is the more convincing idea to not think about reverse trade, not think about anything else. Just pick the direction, always in position. If you see 21 candle, you are confused. Just observe that how breakout happening EMA. Consider it as a chance to always in position of selling. Just participate in micro channel. Okay. Buyers have also same space here, but they are not able to get prices much higher. So sellers will come back at higher prices, moving average gap, and they faded like this. This up move can't sustain because it have no space for sellers. Who sellers are trapped here? They are not exited here. Here, if they lose position, they are ready to take reverse trade because they are not uh, uh, participate in this bull channel. Okay. Okay, we let's continue for next topic. Okay, now we will see one way of trade, all day structure. Okay, then we also discuss for how to uh, see day structure. We will see that some of the examples I just kept here. Okay, so in this all day structure we are approaching for two approach, which is the fading wage approach. So whenever wage we will see, we will trade it. How we will trade it, just discussing here. And another approach is mid-day price approach. Okay, so when price come to midpoint of the day, so we will surely trade here. And in I'm sure that 80% of the time price will either break out or just pull back from midpoint of the day. So I considered it. So here is the midpoint approach. This move is faded by buyers. So this is the breakout to midpoint but not able to, and buyers have micro channel for two leg up. So this is the first leg, two leg. So let's consider it for today's chart. Okay. Now first of all we go through wage. So in 5 minute chart, there is no consecutive three pushes are there. There are two pushes are there, that one and second is here. So it is faded by sellers. So we can consider as a wedge, but it is not exactly wedge. Here at the starting of the day also same uh, looks like wedge. So I waited here, but this move, this breakout candle is just in 30 seconds this given a breakout. So even I not entered here in this candle, I waited for wedge. So this is the micro wedge. In smaller time frame, it is considered as a wedge which have first, second, and third leg. So this is the 5 minute chart. So in 1 minute chart, you look, then this is the wedge, and wedge breakout happen here, bull bar. So trading here is the very high chances that it will further go up. This is the opening reversal day, wedge breakout, and after that there is no wedge clearly seen here. So one wedge is signal is here and another wedge signal is here. Okay, let's go for midday approach. So after price broke this is the breakout candle. Retesting of this candle. Okay, what we are considering is it here is that, okay, if you not entered here, this is the signal bar. Okay, if you not anywhere entered here, this is the second leg which is ending here, and this is the breakout bar. Okay, it what breakout to EMA. So this is the goat bull bar in this scenario. Second leg is completed here. Buying on close, which is the very good approach. So this is the breakout of EMA downside. Close on its low. Good approach to selling here. Retesting to this breakout, moving average, and very next four three candles are consecutive selling bars. So this is the good example. Many sellers have traded here. I traded here. I entered on this candle, put SL here, and I exited here. I will show you that. This is the participated by me. Again, I entered here. Uh, I my entry is up here exactly, and I enjoyed the full move. I exited somewhere here. This green bar. Okay, my tra- uh, trailing SL got hit. So I also participated here. So swing trades are good, that this is the swing trade, this is the swing trade. If you interested, then buy, just scalp it for buyer's leg. Sellers have swing trade. So very decent day for making good profit. Okay, you can achieve totals range. Uh, you can achieve full range. You can trade it full range and maximize your profit today. Easy to predict. Okay, let's get, I forgot that if you consider 800 to price brought down to 700, so this is a single channel of 100 points. You can easily trade it. If you not traded here, then also you can get 70 to 80 point in today's expiry. Okay, so this is the midpoint approach. One approach is here. Another approach is for trade to here. Okay, this is the breakout three consecutive bull bars. Price came to midpoint of the day. Now this is the faded by sellers, uh, which closing on its low and closing below previous candle. Now look, interesting to look it is that if they got follow through and how it reacts to moving average. So as we considered, this is the bear bar which broke EMA. Retest somewhere happen here. So in midday approach, we are considering breakout to EMA. So this is the best example, selling on its low. If you somewhere not entered here, just enter here and take participate in micro channel, this micro channel. Okay, so midpoint approach, uh, one another structure is this. In selling day, we all seen upside day. So this is the downside. Same breakout happen, retesting, breakout. This is the midday structure. Same happen here, midpoint, breakout candle, buy here. This is also buying signal. This is also buying signal. This is the sell signal. We can approach here. Okay. Now let's consider all similar patterns, or if you're looking at starting of the hours, so how you uh, trying the decision or how you unfold the charts. Okay, so here same example is that price got traded here. Look at this. Okay, let me put our chart here. If you look, this is the similar pattern here. uh, First two candle is bear bar, then this is faded by buyers. Now this leg is poor for buyers. They are not getting this much strength here. So, and same does not have space for sellers. Buyers, sellers have faded here and price kept to midpoint of the day. So what you can do is that if you look at here, or if you look just this move and didn't participate it here, so you can try it for midpoint and even breakout. If your price goes in your favor, so you just what you do, put in mind that if I got two consecutive good looking bull bar and it's traded above here signal bar, so I will exit, or even you can exit at uh, above breakout candle. So it is the best idea to trade here. If you traded here, so you enter again here, again enter here. So you have to just think that what buyers are going to do, or buyers have space, so how long it will survive. So selling on this is also best approach. If you traded here, just put your SL somewhere here above this candle, enter again here and participate this micro channel. Okay, so this is the 1 day structure. So after seeing this, you can think of that price will go midpoint or low, chase the low of the day. If low of the day is broken, then high chances that it will stay below EMA, or even bear channel can also happen. So here is the bear channel. So this is the one example that fading happen at starting of the day, good reversal bar. So it just kept going and kept going on. So what it creates is here is that uh, now look, here is also a good example. Okay, now if you similar pattern happen here, if you just tell that I sold here, okay, I want to fade prices, or I want to participate in fading of buyer's move. If you entered here, you see this and you have got idea that sellers have no consecutive bars. If they are getting consecutive bars and they are very good, not looking strong bear bars. Okay, so this is the first leg and this is the second leg. So same approach can be traded here, that if sellers are not going in favor, so they will exit at second leg. So exactly what happened here is that this is the first leg. If they are not exited here, waited these sidebars, and this is the EMA below and gap and exit here. This is the good looking bull bar. Just put your SL here below candle, because this is the micro channel, so it easily get faded out. Good looking bull bar, good looking bull bar. Look at this bull bar. So in this type of day, if sellers have given space and they are not trying to get it get prices down, so more chances are that it will trade in bull channel. So this is the faded by bulls, and bulls are always in position here, and they uh, created channel here. So in channel sellers have also same opportunity. So this is a decent day. So keep in mind also that, but you have to enter here. Okay, so main point is to enter here, and this is the approach. This is not going to further move up. If goes, then uh, this is the not happening. Okay, faded, it also will faded. Okay, so from I observed that from starting of these 3 or 4 or 5 candles, I also assume that this is going to sideways, because Thursday in expiry, uh, more probably of market will sideways. More sidebars are there, but after seeing this bull bar, so this idea is not considering it. If you see this arrow, so this is the wedge pattern which broke EMA here, given space to sellers. Sellers not kept down prices, and again second leg going up. This is the channel here is created, downside channel, where both participants are there. Sellers have more space because it declined, little bit declined, and around 2 o'clock, same midpoint. This is the midpoint of the day. We shown this example earlier, and it given EMA breakout. You just, after seeing these 3 consecutive bar and retesting of bear bar, which is less than 50% body, you just enter here. This is the measured move. This is the 0 point, 50% point. Very next candle buy, which is traded for measured move. Okay, so keep in mind also that if you somewhere sold here, that you just put SL here and just observe that how sellers are acting. If sellers are not gaining in favor of their sellers, so exiting is better decision here. So assume that further uh, buying channel will go on, or there is sidebars coming and sideways market will be going. Okay, uh, this is the same looking chart. Okay, so I also uh, after seeing this faded move, I also seen this, and okay, so it has same day structure. Okay, how? Look, sellers have space, sellers are going down. This bull bar, opening reversal bar, faded by buyers, 3 or 4 consecutive bull bars. Now, exhausted move, look exactly same. This bear bar and this bull 2 bars are exhausted move. If buyers faded here, so sellers will try to fade here. Just put your SL here, same, and enter somewhere here. Okay, here you interesting to notice that buyers are not taking again control for second leg. Bear bar, consecutive bear bar are gaining, and this is the breakout bar. This is the breakout bar. So chances are very that high that this SL will not get it here. Just move your SL to swings. Okay, so now here what happened is that price is kept down and not broke below low of the day. So here we broke the low of the day, so there more chances that prices will go down. Now these sellers taken more time here. Okay, this is just a view. Here price broke below low, so I I fixed that market will further go down. So I am finding best opportunities. This is the best opportunity. H2 sell, EMA gap sell, midpoint pullback sell, even breakout to EMA. This is the best signal. Here what happen is that prices not go below it. So somewhere midpoint of the day it will close. Okay. Here also two-sided trading is happening. So here also more than 100, around 100 points we can capture here. If you participated, you exit somewhere here. If you participated, exit somewhere here. You can also participate that from midpoint. I will trade for 2 legs for buy. Okay, this is the first leg, second leg, and end of the day, it closing midpoint. this is also best example. Okay, so I kept four type of pattern. So I traded for uh, sell. I am not participated here. I sold here, put SL here. I participated it in second half. I entered here, put SL here. I just sold 18,750 put, and its value is around 25 rupees. So why I entered? I captured 80 points here. So what I thought is, if my SL got hit, or even I trade for 330, so going from my side is only 20 rupees. Okay, so I traded here, and which in this consecutive micro channel bear bar, I got around 30 to 40 moved point in options here. Okay. Okay, one more concern I want to show is that this is the Friday expiry. Today's 15th June. Okay. Now here interesting thing to look is that on 8th June same pattern followed here. Look at this. Faded by sellers, price broke below low of the day. Then they have space, buyers have space for two-legged move, and this two-legged move is also faded by. And look at the EMA movement. Same thing happening here. Buyers tried to upside. Previous day is also bull day on that day. Sellers have faded here. Look at the breakout candles. Price kept below the low of the day. Here is the low of the day. Now this is the EMA. 3 and 4 consecutive green bars are there. This is the considered as a high to. Sellers faded here. Enter somewhere here or enter this in here. This is the signal that this downside move is channel, sort of channel, and it's staying below EMA. So participate it here. This is the also Thursday expiring 8th June, exactly last week, and same happen here. Another chart is to show is that this is the good bull bar. It is faded by sellers. Buyers also try to fade it, but they are not gaining momentum from this midpoint. Faded by sellers. Price stays below it, just retesting the moving average, and price just broke the low of the day. Okay, so that's why today I approach it for if the prices broke low of the day. So I will again enter for further downside channel. So these are the good to looking uh, similar structure type of the day, where first hour is green or first swing trade and buyers taking control, and then fading happen, and now always in position is converted into selling position. So these are the good example. Okay, thank you.